Owns Kenya, which is back this week, of course, and we're looking at mobile service provider Safaricom. Now, Safaricom was founded in 1997 as a fully owned subsidiary of Telecom Kenya, as the government sought to prepare the then telecommunications giant for the advent of mobile telephony. In 2000, the government sold off a 40% strategic stake to British company Vodafone Group PLC, along with a responsibility to manage the company as it rolled out mobile phone services in Kenya. By 2007, under the management of former Safaricom chief executive Michael Joseph, Safaricom, which had grown into the leading mobile service provider in the country, rolled out the revolutionary M-Pesa money transfer service. Now, though at the time the product was met with a lot of public skepticism, it's since grown into one of Safaricom's most successful services, having generated 21.8 billion shillings last year, a contribution of about 18% of total revenues. Now, the past ownership of Safaricom, however, was dogged with controversy. Barely 2 years after the company was formed, British firm Vodafone PLC, which owned 40% of Safaricom through Vodafone Kenya, offered 5% of the company to a mysterious firm known as Mobitelair Ventures Limited. Now, according to Vodafone, Mobitelair's role in the deal was a local advisory role to enable the new mobile operator to gain local knowledge. However, the secret nature of the company, which was registered in the British islands of Guernsey in June 1999, attracted the attention of a parliamentary investment committee and the British Fraud Office as well. Now, the findings of the parliamentary committee were largely inconclusive, while the British Serious Fraud Office is said to have dropped their investigation on account of having no discernible offence to investigate. Well, Mobitelair Ventures Limited, moving from there, in 2003, Vodafone then bought back half of Mobitelair Ventures Limited shares in Safaricom, and in 2009, 1 year after Safaricom listed on the NSE, Mobitelair sold its remaining stake in the company to Vodafone, giving Vodafone a controlling 40% stake in the company. Now, the company was listed on the Nairobi Securities Exchange in 2008 at 5 shillings per share. Now, you remember this. It happened and many people flocked to buy shares. The government looking to offload 25% of its 60% shares in Safaricom. Now, it sold off 10 billion shares, earning it 50 billion shillings from the sale of the shares, and this IPO actually remains the largest ever in the history of the Nairobi Securities Exchange. Now, the IPO did not quite turn out as was expected, with most Kenyans quite disappointed at the share price. After they began trading on the exchange, it remained below 5 shillings over the years, hitting lows of 2 shillings and 50 cents. Now, this was a factor that locked in many local shareholders who simply could not afford to offload their shares for fear of making huge losses. Now, Safaricom continued its profitability, and this broke the dip in the share price, with the company consistently earning the title of the most profitable company in the region and the largest taxpayer in the country. Now, last year, the company posted 25.5 billion shillings pre-tax profit with over 19.4 million customers. The company's shares have since made a dramatic recovery, earning the company's shareholders millions of shillings in profit from a threefold increase in share value. The company's share went from a low of 3 shillings and 50 cents to a high of 11 shillings. Now, as of the last trading session on the NSE, the company's share was trading at 11 shillings and 75 cents. This means the value of the company has gone from 140 billion shillings early last year to 470 billion shillings. So to the big question, who then owns Safaricom? Now, at number 1 is Vodafone Kenya Limited, which is, as we mentioned earlier, fully owned by British telecommunications firm Vodafone Group, which holds 40% of the company, or just over 16 billion shares valued at 188 billion shillings. In second position is the Government of Kenya, held by the National Treasury, which owns 35% of the company's shares of just over 14 billion, valued at 164.5 billion shillings. Now, the other 25% of the company is held by both local and foreign individuals and institutions. So at number 3 is a foreign account held at Standard Chartered. It's a nominee account with 263.8 million shares, which are valued at 3 billion shillings. And number 4 is yet another foreign nominee account, also held through Standard Chartered with 250.4 million shares valued at 2.9 billion shillings. Now, most of the top 10 shareholders are held under nominee accounts, which is normal practice for foreign investors, particularly large hedge funds and investment banks as well. And from that rather lengthy brief on Safaricom, let's take a look at our quote of the week, and it reads: "The key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage."